The regulatory landscape has been really great for banking and getting bank deals done. That's why you've seen some more bank deals over the past couple months. You saw Huntington, which is based in Ohio, go into Texas for Veritex. And you've seen a merger of vehicles in the Southeast with Synovus and Pinnacle. And this is sort of like the third large regional bank deal over the past couple months. So it just sort of signals that the Trump administration is really open for bank M&A.
And this is not PNC's first attempt at really expanding its Colorado presence. It had previously sought to open 16 locations in Colorado. Why is Colorado such a hot market for PNC?
Right. I would take a step back and sort of highlight that the PNC, which is mostly in the Northeast, Mid-Atlantic, Midwest, that they've expanded across the Sunbelt states and Colorado with the 2021 deal for BBVA USA. And they sort of double down on those markets with this expansion plan to grow organically by opening up new branches. And this deal today that they announced really sort of supports that growth and accelerates it in Colorado and in Arizona.
So Herman, you're a specialist here in U.S. regional banks. This is your sweet spot. So I'm just wondering, as you look out onto the landscape now, who might be the next takeover candidate? Who might we be talking about in the not too distant future?
Yeah, so you've seen some of these deals where these slower growth Midwest banks grow into areas like Texas, Florida, Colorado. So the banks that are sort of smaller in size, and we're talking about FirstBank's about 20 billion in assets. So banks of similar of that size in these higher growth markets are really attractive to some of these larger institutions.
So with this purchase, PNC's total assets approaches $600 billion. It will bring it closer to the #1 regional bank, which is U.S. Bancorp. Is U.S. Bancorp still a regional bank, Herman?
Yeah,
it is?
I would say there are 3 super regional banks, and I would put PNC, U.S. Bancorp, and Truist, where they're sort of below that 750 mark, but larger than your typical regional bank. And PNC now is a coast-to-coast lender, and have operations all from the Northeast all the way down to Florida, Texas, California. So you can't really call them a regional bank at this point. I would view them as more super regional.
And I want to tie it back to the Fed next week and interest rates, because don't all roads really lead there at this point? And
that's right.
Want to talk about what, again, if this is going to be an environment of lower interest rates for the foreseeable future, what is this going to mean for the banks, but especially these smaller regional banks? Because I'm thinking it may even squeeze their profitability more.
Yeah, it's interesting because we had a few Fed rate cuts at the end of last year. And the regional banks that I cover were able to navigate that pretty well. They're able to keep their net interest margins, which is a key metric for profitability, fairly stable. And that's one of the reasons why they've been able to do that, is they've been able to lower their deposit costs, which was one of the things that really is a key metric for banks to really show top line growth. On top of that, lower interest rates could help loan growth. You've seen some companies like Rocket's Mortgage be very ebullient for lower interest rates, and so that could help improve some of the demand for lending, and that's something that we're seeing so far over the first half of the year.
So they'll make it up in volume. What they lose in profitability, they plan to make up in volume.
They can make it in volume. You'll see some dents in like the rates that they charge for loans, but they'll also make it up in volume and lowering their funding costs.